All right. Good morning, traders. Good morning. Good morning. Good morning, Doug. Good morning, El Jago. Kyle, good morning to you. Good to see you. Sandy, good morning. Happy Sunday to you, Kent. Tony Z is here. Good morning to you. Good morning, Greg. What? Oh my gosh, I love the energy, everyone. Thank you. Good morning, Steve C. Happy Sunday, Gray Lynn. Good to see you as always. Good morning, Stephen. Stephen gets Glenn and Scott mixed up sometimes. It's me. You're stuck with me on a Sunday. Good morning, Victor. Good to see you. Craig. Oh, I love it. Love it. Love it. Give me 1 second here. And I think I have everything. It's funny, like, a new computer, I just don't have the rhythm and the routines that I used to have on the other one. Almost. Not quite yet. All right, officially, good morning, everyone. Hey, John. Good to see you. Welcome, everyone, to Options Income Launchpad Sunday Market Insights. My name is Scott, and I will be your host. As always, what we do is for education illustrative purposes only. I've got an old uh I've got an old logo down there. I don't know where that showed up from. Ignore that. Check my slides. No recommendations. We're not brokers or advisors. We don't give personalized investment advice. Decisions made should be done so at your own risk. Yada yada yada. What are we gonna do today? Market posture, of course. Us and the Oracle getting together, a little bit concerned that the market posture is continuing to deteriorate. Concerning indeed. We'll look at the economic calendar, what's in front of us. We'll talk about searching. We're actually going to put together, I think, a potential bearish watch list to start curating and maintaining. If these are the conditions we have, well, we'll do what we have to do. So we'll continue to maintain our bull list. We may drop some things. You may see something from our bull list that's now on the bear list, where you're like, you know what? This thing has sold off enough that if it rallies up a little bit, it's going to roll, it's going to drop. So there you go. What else? We will build a trade list still. It does not seem like things are slowing down. It seems like rhetoric and or action are heating up in the Middle East, in Iran, and I think that's concerning to obviously the price of oil and, of course, everything else as it trickles down. Okay, trading plan section of the week. We are on section 8. We have at this point finished the first loop. If you're new, you might be thinking, what's this all about? So in our circle community, there are a ton of resources. So for anyone who's new, relatively new, if you haven't gone through and just seen what's there, there's video courses, all about options, all about trading. There's you can download trading plan template. That's a core one. You can take a look at a developed trading plan, so you can see like, oh, what does it look like to write the rules out and give me like at least a sample of what it might look like. So that trading plan template is broken down into 8 components, and we go on a trading plan loop. So every 8 weeks, we circle around. This week we're on section 8, goals. Never a bad time to set a goal, even if it's not, a formal. I'm trying to do this with my trading. The goal may be that, hey, my goal is that I'm going to put 1 hour a week into my trading plan on the next trading plan loop. That'd be a great goal. Just set a goal and accomplish a goal. 2 months later, you have a first pass that looks great. You have a polished version, a more polished version of what you already have. Promise you, there has never in my 20 plus years of coaching and trading have I ever had someone come to me and be like, you know what, Scott, I really don't understand why you had me, write my plan down. What was the point of that exercise? It's never happened. Now, there's been tons of times where people are like, oh, I can't believe how helpful it was. You really understand things better when you put it to paper. You understand what's missing. So, anyway, that's my soapbox moment for this week. Oil stocks are doing, yeah, oil stocks are doing well right now, for sure. For sure. Let's get into it. Let's get into. I'm just gonna reload all of these things here. I don't need you. We will want you and you and you. Ooh. Well, maybe I overloaded it here. Okay, well, let's just go talk about uh ooh, I apparently overloaded it. All right. um March 22nd. That is today. This is our posture now, minus 0.25. This is the Oracle posture now, minus 0.25. We had both had a drop last week. Its was bigger than mine, and we are for the first time tied. How close is everyone else to that level? Also, anyone new, there is a video course on this process, and each one of these components is explained in detail. What is it? Why do we do it? What does it mean? What's the impact? What does the overall score mean? And point of fact, this oracle of ours that we have been refining and building and tweaking, this market posture AI assistant, was informed directly by using the transcripts of those videos. Um, so the oracle was taught exactly the same way that you would be taught if you watch those videos. It all comes together, the circle of life. Okay. First and foremost, did you relax? Okay, we're relaxed on the Chrome tabs. And now let's get cracking. I've got the Oracle ready to go. We will start here. This week's chart for analysis. 03, 22, 26. All right. I'm a little nervous right off the bat. I'm going to tell you that. Yeah, that was not good. I am super curious now that we're seeing like some acceleration of vol. Oh, nope, I'm only going to here. Only doing the trend. If you're wondering why, I am only scoring the trend. I'm dropping. Why? Because that's literally what that. This is not. This here is not a SPY analysis where we say let's look at volume and the stochastics and right. That's a technical analysis. This is literally long-term trend analysis. That's it. That's the component that we're scoring. So essentially what we're looking to do is measure the trend, and get the line that's most representative, and then we assess the strength of that line. So it's a trend assessment. We don't even care if it's at the top or the bottom. Support or resistance does not come into play, right? We don't give it a better score if it's at a high and a smaller score. We say, what's its trajectory? What's the trend slope? So does that make sense? Just trend analysis. I'm dropping mine to 0.75. It didn't, I don't think it's more than that, because we could very easily stabilize, and then we'll draw, who knows, maybe the line looks something like, if I draw a straight line right through here. Ooh, look at that. First try. You'll notice I have these old highs that now, maybe, I don't know if that's what it's going to be, but if that's what it is, yeah, I would say that's like a 0.75, 0.5 trend line. It's maybe a little lower. It's hard to say for sure. This was a big week. So they don't impact the trend. Well, I mean, it's not like they impact the trend, nor are they representative necessarily of the trend. And that's kind of the gist of it, right? Is when we score the trend, that's it. If we do a full technical analysis, then I'll do trend, then I'll do support and resistance, then I'll do candlesticks, and then because there I'm looking for, is there a trade developing? So if I'm thinking of trading SPY, all of that comes into play. But this is not a trading analysis or trading posture. This is market posture, which is the overall. So it's really just making sure we don't let those two thought processes blend unnecessarily. We'll do the other one. If you're going to trade SPY, you're going to go look at support and resistance and candles and volume and stochastics and implied volatility. And we do actually look at implied volatility. We just do it right. I don't want the model to assess the trend with implied volatility if I'm going to go score implied volatility as its own separate, unique component at a later step. So that's why it's a trend analysis, not a full technical analysis. Okay, so I dropped mine to a 0.75. Stephen, you're a minus 0.75 on the long term. Okay. Let me get rid of this line here. Love the questions. Keep them flowing. Let's go see what I'm so curious. 1.25. Okay, so that's a pretty reasonable score, though I'm actually showing it was a 1. Oh, wait a second. I may have inadvertently. I did. I lied last week. We weren't tied. We weren't tied at all. I think I entered the wrong score. I mean, I'm seeing clearly from my own notes. 6-6-26. No, that would have been 3-6, right? Maybe I should 3-15. Oh no, it was a 1. Oh, I never sent it. Yeah, that's my bad, you guys. That is my bad. I thought I hit enter. Okay. Get it together, Scott. Oh, it went unchanged. Continued its pullback, pressing into the lower portion of an established rising channel, testing the 50-week EMA. Broader structures technically intact, but the angle has clearly flattened. No full reversal is confirmed, but continued pressure near support keeps the trend in a reduced strength. Holding for a second week, the long term remains positive, but now. Okay. I mean, it sees it. It gave the rationale. Fair enough. Uh, it is still a one. I have dropped to a 0.75. Let me know anyone else where you're at. Let's go move on to the next one. Yeah, I don't know. Uh, agree with the rationale, but not okay, Kent. That's an interesting observation. I kind of actually agree with you. Like, yeah, that was good rationale, but does it look like a one still? Fair. And I think this is what leads, and I actually tried to when I explained the concept early on, I was like, we don't want a jumpy score if possible, right? So um and I think sometimes when it's slow to move, then it makes it have to be fast to move, meaning all of a sudden next week, if it drops a little more, it'll be like, well, now I'm a 0.25. And I'm like, whoa, that's so fast, right? And I have to like talk it off the ledge of these huge changes. So I think we'll see if that's what happens here. Where it has to go a half of a point. And I prefer to see a more stable, like ongoing representation. So anyway, okay. Neither here nor there. We're gonna let it score it as it will. Who are we to tell AI? Okay. Just a teenager. That's right. That's right. We keep reminding ourselves that, don't we? Okay, let's get this in. I don't mind that I have a Let's zero this week's chart for analysis. 03 22 26. Go. And now we'll go analyze. 1, 2, 3, 4, 5. So what happened? What happened? This is our I want that to be red. 1, 2, 3, 4, 5. I don't know why I think red stands out more to me. There's the start of the week, and you can see that we essentially tried a little bit and then just sort of fell. Definitely a lower low. That's certainly minus 0.25 for there. The question we ask is, did we ever actually get a lower high? Do we think that was a lower high? If you do, if you think this is just sort of like one day, like it dropped one day, sort of popped a little bit above and then dropped some more, minus 0.25. If you think this dropped, popped, and then dropped again, you would probably give that a minus 0.25. So this week, I could see this being at least a quarter, if not a half. It crossed below the purple line, but not the next red. Um, so this next red down here is actually a remnant of the channel. That's a channel with this red one here. So less important here in this chart, especially, right? In this chart, especially. So, what couple of things. Number one, the red line it did break, as Stephen mentioned, that's the 200. That's pretty significant. We broke the 200-day moving average. That's never a bullish thing, right? So that there's no element of our analysis that's going to be like, well, because it broke the 200, we're going to take an extra quarter of a point up. No, we don't do that. We just are sort of looking at it and acknowledging. And that's the same thing we're doing with that other red line. We're saying, hey, that red line existed from somewhere. It could come into play, but its angle is not relevant to us unless it's relevant on the long term, which is what those, all of these straight lines are more long term lines that I'm able to see when I go to the short term. So, okay. So, with that in mind, I'm leaning towards a quarter of a point, not a half a point. I think that this was just like one little blip candle, but not like a boom, boom turn, making it a lower high. I think that the last high was more here. Buyers pushed it up, it rolled over, and it's been sort of coming down since. That's very much subjective. There's enough here where you could be like, Scott, I make the argument that it dropped to this low point, moved higher, and then rolled over, and now that's a lower high. Great. Then you'll drop your score a half a point. I'm going to drop mine a quarter of a point. I'd love to hear from the group. How much are you dropping your short term score? And let's go look at what the Oracle did with its short term score. Minus 0.5 is its score. So it did the full. I did the minus 0.25, and Chat GP, not the Oracle. Come on, the Oracle minus 0.5. Minus 0.5. 0. Okay. Steve C's minus 0.25. Anybody else go down to the minus 0.5? Oh, yep. I see it. Victor, I see you're sending in. Oil is definitely the way to fright. If you I can't remember now. You should be able to like go to your settings to send your message to everyone instead of just to me, and then it just pops you over to the regular one. If anyone else knows exactly the right way, pop it in so he can see that. 0, 0, 0, 0. Greg's zeros across the board. Okay. Uh Volume. Yeah, I can't disagree. I can't disagree with that at all. I think that was right in line with what we were saying the possibilities were. Let's go do volume. Ended up at a 0.25. Okay. You're the highest. The most bullish. All right. Let's go score volume now. What do we think is happening? What's the conviction of this market? I'm going to give myself actually a few less days. 7. Okay. Let's get a picture. Now, there I am going to get volume because now we're looking at 1 month of price plus the volume. And I'm going to go drop that in. This week's chart says 03, 22, 26, go. And I am a minus 0.5. Why are you changing the number of days? The number of days I changed was here. I made it 7. When I had 10, I felt like it was pushing me too much over here. When you have a 6-month chart, the difference between 7 and 10 days is pretty nominal. You don't even notice. But on a 20-day chart, if you have too much space over here, I feel like it squinches everything over here. So I didn't change the number of days that the price action is looking at. I changed the number of days in my open space. Okay. What do I see here? So, as I said, this little cell over here, even though it's by itself now, I'm not counting that. I'm not counting that, but we have to immediately see start, finish, slope. I mean, any hope that this is even neutral is pretty pretty low. So now what do we have here? We have one, two, three, four, five, six sell days. Whoops. 6 sell days. One tie, one buy. Whew. I mean, I'm kind of leaning towards the minus 0.75. It's, 6 or 7 minus 0.75, 8 or 9, and then you add the next. I did it too early. You're saying, Steven? You're right. It's the gut check. I'm just saying when you see it, you're like, eh. 611. I think 7 would probably be the same. If it got to 8 plus without any more than one buy day, that's probably what the worst we can see for volume. Yeah, so I think that's it. I think that's where we're at. I wonder if that's even almost getting formalized, right? Where it's like it has to be 2-1 or 2-0 for the buyers to get the first. So if it's like 2 or 3, minus 0.25, 3 or 4. No, that's not right. Let's see. 2, 3, 4. 2, 3, 4 is like a minus quarter. 5, no, 2, 3 minus quarter point. 4, 5 minus a half point. 6, 7 minus 0.75. 8 plus. It goes to a -1. I think that could work as like a formal structure. I don't know that I've ever formalized it. Because you never know if you're going to have like 1 or 2 buy days or 3 buy days, right? Because if you have a 9-3, that's very different than a 8-1. Okay, maybe it's not quite formal, but it's getting close. I'm going to go to a minus 0.75. And as I thought, all 3 dropped. Boom, boom, boom. We're already 3/4 of a point down. And the model says minus 0.75. It was yep, minus 0.75. I think we're all in agreement with that. Whoops. What did I do? Minus 0.75. Okay. Any questions halfway through? So far, so good. Everyone feeling around the same area? I am down 3/4. The model is down 3/4, but in a slightly different way. Wait, something happened here. Theirs looks the same. That's the same. That's lower. I'm missing something here, right? This does not look like it's doing the math. Yeah, it should be a -1. I don't understand. One. Nope, that's not what I wanted to do. Minus -0.5, minus -0.75 equals sum of B16. Yo, this is baffling to me. Redo it. Oh, Steven, the spreadsheet master fixed it. All right. Let's keep going. Well done, Steven. Nope. I didn't want to do that. Reopen that closed tab. And let's get a picture. Okay. Okay. Major market analysis. This week's charts for analysis. 03, 22, 26. Number one. Okay. Our thought process. Now, Russell's still holding on to the lead. NASDAQ also in the lead. Everybody's dropping. The Dow is the worst. Everybody's dropping. It's broad based. I mean, it's still negative, but it's not defensively negative, at least on this time frame. 133. A lot of parity. A lot of parity between the Russell, or excuse me, between the Dow, NASDAQ, and S&P. All lockstep. Again, broad based. Still the Russell, barely, but hanging on. I'm not super comfortable. I've been saying this for a little while now. And as I've been saying it, guess what's been happening? The market's been getting worse. That's what I mean when I say I'm skeptical of a small cap led market. If there was a Nasdaq led market, I would be like, it's not the best, but it can carry things, right? It can stand alone much much better equipped to stand alone than small caps. Let's drop down to 66. Let's get a picture of it. Let's drop that picture in. And what do we see here? I mean, you'll notice back here, there was a little bit. We were like, oh, the Dow is a little bit popping. And then all of a sudden it dropped into the middle. And then now it's dropped down to the bottom. It's fighting with the NASDAQ, which, we're certainly not seeing any great recovery yet from the NASDAQ. But at the same time, we are still seeing the Russell holding on. I got to tell you, though, my thought here, even though the Russell, with everything getting pulled underneath, I'm taking my score to a 0. It's not uh it's not defensive. I'm not negative, but I can't also be like, this is slightly bullish. Everything's under 0. I maybe should have done this last week. Before this, there was still things in positive, but at this point, everything's under 0. Don said then he's negative. Okay, negative now. Negative 0.5. I mean, it is underwater. I mean, that's worth a consideration. Let's see what the model says. Zero. Oh, also a zero. And that was oh, wait a second. It was already a zero. Am I wrong? Oh, I haven't sent it yet. Ha! Don't do that again, Scott, you dummy. Sorry. Let me. I'm scoring it down. 22 on the 22 day. Yeah, I mean it's really no, but the Nasdaq is in a leading position, which is kind of like, hey, that could turn into something, maybe, possibly. But as of right now, it just says it's broad based. Everything's going down. Um, so I feel pretty comfortable taking my score down to a zero. But if you took yours to a negative, I would be like, okay, I see it. Understand. I understand. Let's go get started on the next one. Where's the X for this? Why is this so big? How do I close it? Okay, that's fine. Let's get a picture. Let's go see. Oh, now look at this major market. So Don, I believe, said he's a minus 0.5. Um, um, the oof, that's a lot of questions, Thomas. Let me get to that here in a second. What is the purpose of all of this exercise? Ah, well, so hopefully you'll take a look at the trading plan outline, and in there you'll see section 2 talks about market posture and what are direct uh, components of our trading that will be impacted. Things like how much risk are you willing to take at any given time? I don't know your thoughts, but mine are it should absolutely be correlated directly to market conditions. Stronger market, take more risk. Market starts to deteriorate, risk levels start to shrink, number of trades start to shrink. We only look for opportunities where there's potential momentum breakouts, high reward to risk ratio, which will bring you to the PLTR trade. The reasoning is in the trade itself, which typically is going to be what is the established reward to risk ratio, where I can say, hey, I've got a 5-to-1 reward to risk ratio, B, high liquidity options, really been a struggle finding trades with acceptable liquidity, bid ask spreads in their options. So essentially what we're doing right now is we're saying let's take the opportunity on a Sunday when there's no pull, there's no emotion of risk. You're able to separate and evaluate the market objectively across multiple perspectives to say what exactly are the conditions of this market. Well, if we understand those conditions, we understand A, what needs to happen for them to improve, or B, what would happen, what would it look like for them to continue deteriorating. So we don't just say, oh, this is our score. We say, well, what would it take for that to get back up to a, what would we need to see? We would need to see money flowing into the Nasdaq at a higher rate than we're seeing it flow into others, right? So the scoring for this, as I is in a video I'll show you at the end. I'll show you where some of the different assets available to you are. But there's basically about a 10 to 12-minute video for each one of these components that says, why do we do this? How do we score it? What is the impact? And what does it produce overall? Because having a strong orientation to understand when should we push and when should we protect, it's probably one of the best skills any trader can develop, new, established, anyone. Hopefully that makes sense. I think I hit them all. We'll actually pull up PLTR and talk about it as well. Okay. Score minus 0.5. What are we seeing here? And I don't know about you, but I think it's important for us to be thinking about what conditions do we see that indicate that the institutions are just doing things differently now. Right? They're slow and sometimes they're tricky and they hide and they manipulate. But overall, if we're able to peg these things and keep an eye on them consistently, we've seen this shift, right? Our risk is, Thomas, I don't know how new you are. I think you're pretty new. So besides being able to answer your questions, I want to say welcome. But if you go back and you look at our market posture score, you can see that it's for 8 weeks now. We've been like, yeah, things are drying up. We're picking our battles, or at least trying to. I can't just disengage when I see the market drop. I mean, I guess I could try, but I don't feel like I personally can. So I'm going to still trade. I'll trade a little bullish, a little bearish. I'll do some more day trading. I'll be doing less swing trading, because swing trading is empirically harder when these conditions are like this. I mean, if you go look at real quickly, we have to go back a little bit in time now. How do I scroll this thing? I'm so not used to there we go. Okay, so back here, I'm a 5 back in November. Very bullish back then. Last April was when we were last negative. Tony's exactly right. Right. And it wasn't like, oh, that April tariff thing happened and then we went negative. Our score was deteriorating all the way up until that. When that happened, we were mostly out of the market, maybe in a few puts, right? So that's why it's important, so that you have confidence that as things are shifting, you're right on top of it. Do you have your pulse on what it is that institutions are attempting to do? And that's the objective of this exercise, right? Are we seeing that things are improving or continuing to deteriorate? Obviously, things are continuing to deteriorate. Exactly right. Okay. Love the comments. Love the comments. Okay, let me see. Where are we? I lost my train of thought here. Oof, I'm going to take a little extra time. Hopefully not too much. Minus 0.5. Let's go market. That was a big drop. The model's really starting to see things more negative than we are. Sector rotation. I got to speed up now. I'm like, I look at the time and I'm like, oh, I think we're moving pretty well. And then all of a sudden I'm like, oh, I've got to speed up. If we don't get it done today, I promise, pinky promise, we will do a bearish search / watch list creation on Tuesday evening. You can see here, energy is just dominating everything. It's like energy and everything else is down here. Let's see. Am I on sector? Tech, yes. Boom. Now here's the other thing that we're doing when we go through this, Thomas, to continue answering your question. I want to understand where institutions are moving money because it helps me to analyze the strength of them. If I see money flowing into technology, financials, industrials, and communication services, I'm expecting a pretty bullish market there. If I see money flowing into energy, consumer staples, and utilities, I'm expecting we're in a very different market. So we're using this alignment to assess and score, but we're also using it to search. Like, hey, what sectors should we be looking to move money into at any given time? So, okay. Yeah. Let's find the market. There's the market. A few things are kind of hanging out on top of it. You can see how quickly this picture erodes. Energy at the top, then utilities, little bit of industrials trying to hang on, healthcare, materials, staples. Where's everything growth oriented? It's all down here, right? We've got tech just barely above. We've got comm services here. We've got discretionary, and financials are just getting decimated. There's financials and discretionary at the very bottom. And so we can see that it's did I take that picture? Not the money flow is not looking favorable at this point in time. Sort of the gist of what we're saying when we look there. Now we get to 66. This is our scoring mechanism. Let's get a picture of this. And we have energy at the top, materials, utilities, staples. The only remnant still, but it's actually been kind of in a bad spot, is industrials. Then down here we have healthcare, communication services. What's at the bottom? Everything growth oriented, discretionary, technology, financials, all down at the bottom. This is the scoring. I actually kind of feel like minus 0.75 for me. I took mine down a little bit more. So did Steve C. Where are utilities on the 66? They are here. So kind of improving, right? Seeing money flowing. Let's go look at the 22, but I've already got my score. This is just to sort of, see what's coming. Higher energy prices. That's still what's coming. Everything else underwater. Okay. Um, let's see here. Let's get this picture. Let's get here. Okay. I'm a minus 0.75. Let's get ready to finish with the VIX. Then we'll go through our watch list. We already talked about goals, so we're good there. Section 8, trading plan goals. I'm going to try to get through this, get through the watch list, and then still show a couple of things. We may go 5 minutes over ish. My VIX score is dropping. I had a higher low. It could turn around again this week, and that would be fantastic if it did. Right? Um, this is definitely a higher low than this one. It turned Boom, boom. That is minus 0.25. Although, wait a second. I think I had both. I think it's actually going to stay the same. I think I got plus 0.25 here for the lower high here to here. But so we kind of have a little bit of a coil. So yeah, I'm actually going to leave my score the same. I changed my mind. I'm leaving mine the same. It got a little uptick for this, not getting back to that old level, but then it didn't revert far enough. So now we're going to see if this thing can like stabilize and roll over. That would be amazing. That would be another attempt at a lower high. I'm going to leave mine the same. Let me see. Let's get a picture. Give me your thoughts on that analysis, you guys. Boom. Let's go. I'm going to leave mine the same, minus 0.5. The Oracle downgraded to a minus 0.75 on sector rotation. I think that makes a lot of sense. And ooh, it's more negative than me. Let's see what it does with this VIX score. If it drops its VIX score, it's going to really start to accelerate that negative forecast. And let's go here, this week's chart for analysis. 03, 22, 26. Prior score, new score, no change. Okay. Fair enough. We all held. It held at minus 0.25. So there it is. Those are your scores. I dropped 1.25. The model, the AI dropped 1.5. Obviously, conditions are continuing to deteriorate. We know we need to see something that's going to break the cycle. Obviously, it's likely to have to be some sort of de-escalation in the Middle East, whereas it seems like the Strait of Hormuz situation is continuing. We've fallen a lot, just right. Like it's, I mean, you can see that the AI was a little slower to get moving. By early February, we had dropped to a 2.5. It was still kind of clinging to a bullish score. Let's go connect these, and that maybe will help. So this is February 8th. So on February 8th, we had dropped our score to a minus 2.5. Did we come out saying, "Oh, we're going to get so bearish"? No, we said, "Look, there's some conditions about this." We've certainly said that we open the possibility. I haven't, and I've traded puts, and I know other people have. I haven't done alert puts yet because it was just when it's early. I'm always a little reluctant because I don't want to steer new people into trading puts when they're not necessarily comfortable with it. Um, but yeah, what happened on February 8th when our score dropped to a 2.5 by a point? We're saying, hey, this is significant. We're now moving into out of bullish and into neutral territory. We're continuing to see conditions deteriorate that hadn't really hit this thing quite yet. So now when it's down here, are we like, oh man, I've taken a bunch of losses? No, I've taken some losses, a couple of gains. Overall, I'd say maybe flat for that period, but the market's down 6%, 7 from the highs. Let's see. 644 divided by 697. Wait, where's that calculator? Where are you, Mr. Calculator? There it is. Okay, 644 divided by 697. 92. Oh, that's like almost 8% at this point. So I don't know. Hopefully, Tom, that helps you to see, like, why are we doing this? Well, in this regard, in no means do I think we have a crystal ball. Of course, I don't. We no way we think that. We just think that if we can maintain a consistent, constant evaluation of the same variables that give us different perspectives, we can get an overall assessment of what does this market look like, what's it going to do, and so where we are now, for us to start to really get more bullish or more bearish, we just are going to keep watching the scores. If we start to see improvement, we'll start doing more one way or the other. But it's going to help orient us around how our risk management, our strategies, our trade management, how much do you sell when it gets to your first target? When do you tighten stops? How tight do you make them? All of those things. Gosh, I'm telling you, if you can orient a good chunk of that around an overall market posture, it's going to make everything else a little bit easier. I'm just here for the bourbon. Love it. Okay, let's go through our watch list and just see if there's anything that, if this market finds stability, we would be interested in trading bullishly. Now, starting here, I'll tell you this. For me, it hasn't broken support yet. It has not broken its support level yet. So if you're still in it, now you're saying sideways, but I actually disagree. I would say it was in a consolidation, and then we did have a breakout. That right there, that was the largest chunk of buying that we had seen. We saw some back here, but it tried and then failed to come out of that, which is fine, and it may do the same thing here. But if I'm able to get this replicating, if I'm able to get that, that momentum again over here, well, I have the ability to set a stop underneath this level and a target up at this level, and I'm getting 4 or 5 to 1. So that's the rationale behind that. Is we saw a surge. Now, where is in fact PLTR? I saw, actually, did anyone see this? Some news announced over the weekend about some new Pentagon deal. Is anyone watching the news on this one? You can see here the bid ask actually shows the stock price up a little bit after hours. The stop, was the stop hit? I didn't think I had it. I thought I had it below the stop or below the support. I'll have to take a look. Those are all suggestions, right? Remember that when those come, if you look at it and you're like, man, I don't know what Scott's thinking here, don't take it. That's reasonable. Or you might say to yourself, gosh, you know what? This trade is in software and I already have 3 software trades on. Well, then, yeah, you're not going to add another one to it, right? So these are just ideas that allow you to look at it and say, what would cause that? Sometimes it's just simply what you're doing here. There are times where I will stop out of a trade, other people will stay in, and the trade recovers. Right. And so these are all just general ideas that you can use to shape the trade. If you dogmatically follow it, there will be times that it'll work amazingly, times that you'll stop out, another. It's hopefully that makes sense. I don't remember exactly where the stop was, but for me, I tend to watch and see, do I believe it has broken support. And I also tend to look at my stops end of day more so than intraday. So I gave this one an extra couple of days to see what happens. Some people may have closed it out because it was a Friday, and the way we manage is definitely part of the game. Okay, so that's hopefully the rationale, and if anyone who's still in that trade. Alcoa. Now, what are we looking for? We're looking for anything that may have if the market bounces, a bullish quality to it. Apple. Nope. You can see most things are now really starting to push down. We need to see buyers making some smash and grab type moves. Now this one was interesting because we were seeing some momentum here. It's defensive. It's a consumer staple, and then all of a sudden you get this huge sell off. So that's a no. AMAT is one that I've maintained interest on, but you can see even when it moves, it's just barely eking out any gains. AMKR, Amazon tried a little bit. Now it's sort of just lost its momentum. APH, ASX. I'm going to put ASX on the list. It's held the 50 pretty well. And if we get a bounce from this level, you can see that while a lot of other things have been getting pressured, this thing has been holding up on that support level. AXP is down. We know financials are in a bad place. Eventually, we'll look for some sort of a break. Baba is down, gap down on earnings. Their AI solutions not as meeting market expectations. BAC down, BCS. You can see we're not. Most things have had quite a deterioration. Citi. So I think Citi is starting to actually show a little signs of stability. It's not anything that looks bullish yet, but it actually has some stability to it. Caterpillar, no. CF, I would actually still give CF a consideration. Got some momentum. Big spike up. It pulls back. If it doesn't break below on this pullback and starts to turn, it could have another wave. Coherent was one that I was looking for, and it was like an amazing day. And we had quite a few of these where it's like gave back quite a bit. I'm gonna keep watching. Cisco, flat. Delta. Okay, so and this might be one where some people are like, what are you looking at? I'm looking at this consolidation followed by this buyer smash and grab reversal. Bam. Now, if this pulls back and it only pulls back to somewhere in here, well, then I have a higher low, right? This is kind of the same thing where it goes up, down, and then bam, this thing hadn't done anything in here until it gave a little up, down, up. That's what I'm looking for, right? That little up, down, up. So Delta could be working its way into it. Diamonds, new lows, Dow. So this was one of our last ones, and same thing over here. So Thomas, if you look, we put the trade on here, and it started, and then it had a little hiccup. Now, none of these days actually closed below support. Tested, tested, tested. And then it actually made the exact move we were looking for. So that's where, as much as we want to, be rigid or dogmatic with stops. We have to give it some flexibility. So that we don't just get picked off of trades. Now what? Well, now that it made its move, I'm thinking, hey, if this thing consolidates back down somewhere in here, well, then we're going to have this whole situation over again, right? This happening over here and us entering a new trade over here. That's what I'm looking for. So I'm going to put it on my list with wishful thinking that it gets there this week. Ford, nope. GE, nope. Can I review how to review a put in a descending chart? 100%. In fact, let's do it right here. If that happens again, boop, boop, boop. Now that it's dropping like this, at that time, we're thinking, hey, this thing still has some upward momentum to it. But now that the sellers have taken control, our thought process has shifted. So now we're thinking that this may be the flag, the pole, and this is the flag, right? So you'll be looking for these bear flag types. So reverse it. If in an uptrend I'm looking for a mild pullback, in a downtrend I'm looking for a mild upturn. 1, 2, 3 to the upside, and then it rolls over, and then we're thinking now I can get the next pull down. 1, 2, 3. Now, does it always work clean like that? No, that's why we manage trades. That's why we set and say, oh, you know what? I'd probably try to sell a portion of it here, then tighten my stops. I would, right? So, because we never know. We just like to come in and say, hey, if this replicates its pattern, what kind of a reward to risk ratio do I have the capacity to produce? And that becomes the rationale is it held the resistance, it's bouncing down. I have the ability to produce 3 to 1, 4 to 1. That's what I'm looking for, right? Gold is down, GM is down, Google flat. Google could break out, but at this point, I'm really not looking there. This is what I would say looks sideways for a while, right? This thing is sideways. What are we looking for? I'm looking for a bust and then a pullback, and then we're ready to possibly get into the next sequence of a trend. Right now, we're in consolidation still. There's nothing there for us. Goldman, I agree. Starting to find a little stability. I am looking for that. I'm looking to see like, hey, does financial start to stabilize and actually maybe turn and make a run into the market? Let's see if we see that happen. Home Depot is down. So some of these where you're starting to see these sell-offs are where you might decide you want to look for an opportunity the other way. IBM was one that we were like, that looks okay, and then it fell apart. 3 cheers for what? Liquidity snobs. The options weren't good enough. We didn't do it, right? We didn't do it. But these are the types of things that I'm looking for: the break, the pullback, the turn. Now, if it fails, it fails. Okay. Intel. I don't know. There's some more of that. Intel, like Google, but at least they're sideways. They're not dropping. As things continue to look worse and worse, IWM is down. Lumentum, it's a very volatile stock. If you ever take a run at it, it could get bad. This is one that, in fact, you know what, Thomas? This is one that I took and I stopped out of early. And there's actually a few people who held on, and then it actually turned. And by the end of this, it's actually profitable. So if anyone happened to now, is that like a great idea to never have a stop? Of course not. But there are definitely times where you're like, hey, I'm going to just give it, maybe you get stuck, maybe you give it a day. And this thing turned around, came back, made a beautiful move. MasterCard down. Meta is down. Monster is down. Morgan. Ooh. All of a sudden, there's a little bit here, maybe trying to figure it out. Microsoft, not yet. Micron was one that we were in for a while, made some money, it dropped and then turned. Now it's earnings. We'll keep an eye on Micron. It's still showing some bullishness for sure. Just made new highs. Netflix, no. Nvidia sideways. Palantir. Let's see if this thing can hold and turn. And make that move. QQQ down. Rocket Lab tried and is now back in. Steven, I know, has a bear call spread. That should be fine. Ross Stores looks bullish, but the liquidity is not great. I can tell you that. So if you trade this, you're trading into some wide spreads. Ulta. I know I spend more money there than I should with my daughter. Ulta. Yeah, they got smashed on earnings, didn't they? Expecting 8, they got 801. They met their expectations, so there must have been a pretty hefty but. We made 801, but and then it drops. I'd keep an eye on it. You could be right. It could definitely be overdone. Let's see here. RTX, that's a maybe for us. Boy, there's not a lot. As our market posture has deteriorated, guess what else has? Our weekly opportunity list. Silver down, SNDK. I think SNDK still looks good on a pullback. It's a volatile stock. It's an $800 stock. It's got some momentum to it. And we're going to add a new bearish watch list this week. Obviously, we ran out of time. I was very slow today. My apologies. SYY. SYY starts to make another move up and rolls over. I'd be thinking, yeah, this thing could make its next move down. That's what we're going to be looking for our bearish watch list. TJX. TJX actually has some bullishness to it, but it doesn't have great options. TJX and Ross Stores are both the same. Tesla down, TSM down, Vail down, Viking Cruises no, VOD sideways, WDC. I think WDC can still be put on. These digital storage are still looking pretty good. Walmart doesn't look good. Looked like it was trying and then it rolled over and failed. Now it's dropped below the 50, trying to hold the 100. What do I think of INTU? Intuit? Is that Intuit? Very similar to Palantir. Big smash up. I would say that was a viable position, and it still looks like it could try to go. So I think this has some bullishness to it. This is what it looks like. If you go find any time that something reverses into a new trend, that little up, down, up buyer's initial move is definitely something you would expect to see in that pattern over and over again. If you do reward to risk, very good. 100%, I agree. If this thing can find that same momentum here, you're going to have a great trade. And if you wait until it starts, you'll be like, oh, well, now am I too late? Yeah, we got to put it on and then we got to go. Risk in face of uncertainty. I like it. Okay, guys, man, 17 minutes over. Thank you for the extra time. You guys are amazing. It's a tough market. I mean, look, this is one of the worst postures we've seen in 3 years of this group. We've really only tilted negative a couple of times, and we mostly see recoveries. We haven't seen an extended bear market since this group has started. we've seen it touch like for a half a minute, touch a 20%, and then it recovers very quickly. We want to be kind of thinking about if this does move into bear market territory, what's the possibilities? I mean, we've seen a couple bear markets that drop 50% from their highs. That's a shit ton of drop. We better be, if we move into something that really starts to get worse and worse, we want to make sure that we are prepared for that downside. Because what we've seen so far, this is a consolidation. This is hardly anything, 6-7%. If it gets worse, it can really get worse. We just haven't seen that for quite a while. Anyways, thanks everybody. It's good to see you guys. I'll see you tomorrow morning. Tomorrow morning, we'll transition our market posture to our trading posture, and then we will talk about all the other important things. Have a great rest of your day. As always, happy trading.